Howdy hoo, all my stock market gamblers. Welcome, welcome, welcome. I'm Tall Mike. Anyways, today is Tuesday, October 13th. I want to talk a little bit about banking today. JP Morgan, one of the world's largest banks, just reported their quarterly revenues and income. Anyways, they made about $10 billion on $30 billion in revenue. Now, when you think of a bank, you would think that they made most of this money by making loans to small businesses, making, loans to individuals and earning interest on the loan. That's not where they make their money today. Their money comes from trading. Yeah, I call myself a stock market gambler, but what they do is they take your money and they go to the casino, the stock market, and they do trading. That they have a little bit better odds than us. Their form of trading is kind of a fixed game. Let's talk about this a little bit. I think banks should not be allowed to trade in the stock market. I don't think they should be allowed to gamble with your money. Now, if they lose all your money, who do you think is going to pay for it? Not the bank, not the bank. The Fed's going to come in, bail them out. Taxpayer money is going to replace it. It's like if you went to Las Vegas and you went to the roulette wheel and you bet on red or black. Every time you lose, someone else pays. Every time you win, you get to keep the money and you're a genius. Look, these bankers are going to get the highest bonuses they've ever gotten in their lifetime because their income's up, their revenue's up. But I want to talk about how they're making money. First of all, I used to work in a bank. When I first got out of college, I was an economics major and I went to work in a bank. Banking's a very interesting business, but it's very conservative. They don't like to take risks. They like to be sure that they're going to make the money. They want to be sure they're going to get the money back. And this is what the Federal Reserve does. It backs the banks. Now, in my opinion, the banks kind of own the Federal Reserve because they're kind of tied together. One with the other. Anyways, they get tied together. But anyways, their profits are up 30% on trading the markets, on trading securities, on trading equities. All of these are up, 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 up. Now, what are they doing? Well, they're front-running the Fed for one thing. Anyways, they're buying mortgage-backed securities because they know the Fed's going to buy it from them. They don't have to worry about it. Well, let's say you go into the bank and you get a loan. Now, loans on houses today are incredibly cheap. They're giving it away. Now, why is this? Why can you go to the bank and I've seen 15-year loans as low as 1.75%, 30-year just over 2%. All right, now who's going to give the money for 30 years at 2%? It's not the bank. What the bank does is they give you the loan. They package the loan, they sell it to the Federal Reserve. Now, anyways, they get paid, let's say they're 0.5%. They're making 0.5% with zero risk, okay? Because if you don't pay that loan back, anyways, who pays that loan? It's called Fannie and Freddie, Fannie Mae and Freddie Mac. These are the two corporations that will pay on the default if you default on getting the loan. Okay, so the taxpayer ends up paying for the default. They make money on the loan, but the loan should not be down here at 1.75%. No, there's no way we should have these low interest rates. Now, you would think that low interest rates are really good. Well, of course they're really good. You know what the average person does, though? The average person has a credit card. Now, a credit card, the banks, they can lend as much money as they want. They can get all the money from the Federal Reserve at about 0.5%. So they're paying 0.5% for their money. Now, what are they charging you on a credit card? They're charging you over 20%. 0.5% they're paying, and they're charging you 20%. Why does it have to be this way? I don't think it does. Well, anyways, the low interest rate environment that we're in on the housing market and the low interest rates you get when you put money into the bank, I don't think this is good. People say that low interest rates are good. I'm telling you, Artificial rates are bad no matter what they are. Let the rate adjust to what it should be. If the real rate of it, should be at 4%, when you put money into the bank, you should be getting 4%. Not that quarter of 1% that they pay you. No, it's stealing money from you. It's stealing money from elderly people on fixed income. People cannot retire because they cannot get a return on their money, a safe return, because interest rates are artificially low. Now, when interest rates are artificially low like they are right now, what happens to asset prices? Well, they go up, they go up, they go up. Look at the stock market. It's going straight up. Why? Because money's free. Money's free. What are house prices doing? House prices are going straight up because money is free. Money is 1.75% for a 15-year loan. This should never happen. Let me ask you this question. How much money would you loan to the government at less than 1% interest for 30 years? How much would you loan them? Well, you would not loan them anything because that's ludicrous. Where does all the money come from? It comes from the Federal Reserve. The Federal Reserve prints unlimited money, makes your money worth a lot less. What do they do with it? They buy mortgages because they can't have interest rates going up. You know what happens if interest rates went to where they're normal, to let's say 4 or 5% on a home loan? Homes would come crashing down so fast, so hard. And the Federal Reserve cannot have this happen. They just cannot. It would be total collapse. But for the average person, would you like to buy a house for, let's say, like what they should be valued at? Let's say $150,000 to maybe $200,000. Would you be willing to buy them there instead of in my area? I'm in the Bay Area, and our houses start about $1.5 million, and they go up to $2.5, $3. Well, they go up to 10 and 20 million, but they start at about 1.5 for a starter home. For a 1,200 square foot starter home, it's about 1.5 million where I live. Okay, the reason for this, there's no reason to keep rates suppressed like this. You should be getting money on your savings account. You should be making 3, 4, 5, 6% interest. But no, you will never be able to retire at the rates they're paying. It just doesn't happen. Now, our parents' generation, they could retire because they were getting 8, 9, 10% on their money that they saved when they put it into the bank. And then the bank would loan that money out to others to buy homes, to buy, small businesses to start up. And it was what banking was supposed to do. What does banking do now? They take your money and they go to the casino. They go to the stock market. They go to a rigged game. They just got fined $1 billion for rigging the silver and gold metals market. Anyways, $1 billion. But hey, they just made $10 billion. They paid the billion, not a million. $1 billion is what they paid in a fine. But anyways, they paid the fine because it was a cost of doing business, because they manipulate the price of gold and silver down. Now I want to talk about this a little bit. Gold and silver is down today. It's getting hit hard. This is paper gold, paper silver. Anyways, if you have extra money, go ahead and buy some today. This is a gift. Anyways, I'm actually buying long calls all the way out till June on the GLD, the gold, and the SLV, the silver, and the GDX, which is the gold miners. I'm all the way out till June. But what I also do is I stack physical gold and silver. It's down today. I'm going to buy some more. I'm going to put it away. I'm not going to look at it. I don't trade the physical silver. I trade the GDX, the GLD, the SLV. Physical silver I hold on to. Today is a gift. It's a gift they're giving you. JP Morgan is giving you a gift today. They're manipulating the price of they manipulate the paper price, which brings the physical price down a little bit. Not as much as you would think, though. The physical price still stays pretty strong. But anyways, play their game. They're gonna manipulate it lower, and this is good. This is a good time to buy, because I guarantee you, with the printing of money, with these artificially low rates, gold and silver will be much higher. They're cheap here. They're cheap right now. Anyways, that's all I got today. If you liked it, hit the like button. If you really liked it, go ahead and subscribe, and we talk about this stuff. But anyways, the play today is the GLD, the SLV. They're getting manipulated lower. Artificial interest rates holding everything down. There's no price discovery out there. If we knew the real price of gold right now, oh my goodness, I'd put it above 10,000 an ounce, and it's going to get there. Real price of silver, definitely over 100. Definitely. Right now you can get it. I mean, I think the spot's about $24 today. That's cheap. That's cheap. Get some silver, get some gold. It's a gift. Anyways, banking, that's my rant on banking. I hope they go back to the old ways where they helped the people. They didn't gouge them from 1% to 24% like your credit cards. They gave loans to small businesses at reasonable rates, and they actually had skin in the game when they made a house loan. And I don't think we're going back to those times, but I'm hopeful. Anyways, I'm Tall Mike. We'll talk more again tomorrow. Get out there, do some trading, buy the GLD, the SLV. I like it here. I like it. I'm a stock market gambler. We'll talk to you tomorrow.